Okay, folks, welcome to this week's commentary with regard to the price action on Bitcoin. It is March the 6th, and what we're going to talk about are correlations. And this week, we're going to focus on the 10-year yield and Bitcoin and where we think, ultimately, we believe that Bitcoin is going to go after we discuss the correlation between the 10-year yield, which is indisputable, in a moment. But first, I really am very, very proud to have a major league sponsor partner with us, and that is Coinbase. Huge, huge. This is where I buy my Bitcoin and XRP, and it's where I store it. So Coinbase, the number one exchange for cryptocurrencies, earn up to $34 worth of crypto when you open up a new account. So use that link below. Get started today. And for those just learning about crypto, they have really, really good blogs. So if you click on Learn and head on over to Crypto Basics, a lot of really good information here about cryptocurrency trading, tax ramifications, etc. So don't hesitate. Open up that account with Coinbase. Use that link below and get up to $34 worth of crypto when you open up a new account. Okay, so let's get to it. Now, when trading crypto, you hear quite often that there are no correlations with blockchain, and that's nonsense. We've proved it with the Consumer Price Index. We've also proven it with the Prings Inflation Index. There isn't a correlation, but in the case of the 10-year yield, there is an inverse correlation. So before we go to that, I want to talk about the price action on the 10-year yield last week, and it was just simply outstanding. And it appears as though we are probably going to head up higher. I have a price target on the 10-year yield of 1.72. Now, it may take a day to get there, could take a week to get there, could take a month to get there, for all we know. Technical analysis is all about probabilities, not guarantees. So this chart here gives all appearances that in all probability, we are going to head up higher. What does that mean for Bitcoin? Let's first take a look at a daily chart. And I warned last week that I did not believe that Bitcoin was a bubble, but I did believe that it was going to move lower. I'll go to my price targets in a moment. Fast forward from last Sunday to present day Saturday, 6 days later. And while we did rally back off the lows of last Sunday, what's happening here is that we're putting in what appear to be lower highs. You have it on price. You also have it here on your Stokes and also on your RSI. So while the path of least resistance remains sideways to up, we're under threat of a possible break to a new lower low, and that would change the path of least resistance from being sideways to up to then being down. Now, at current, we are down 2.3%. We are trading at current down below the 21-day exponential moving average. That's really a line in the sand of bullishness or bearishness, very, very short term. Ideally, if you're bullish, you'd see a close at the end of the day above that mark. And if you see it close down below the 21-day exponential moving average, well, in all probability, you're going to get a new lower low the following day. So we're seeing a bit of weakness here. There's no reason why it can't rally back, but all we're doing is pointing out what the market is sending us signals about. And that series of signals is that our indicators, RSI and stochastic, are validating the price action that we're seeing on price, which is a lower high and the potential for a new break to a lower low. Support at current is at 43,100. Volume today is huge. This is the highest volume bar in at least a year. Let's go back 2 years out of curiosity, and you would need to go back to March 13th, so a little bit less than a year. March 13th of 2020 to see volume at these levels. That was an up volume bar, and it marked a capitulation bottom on Bitcoin. So keep an eye on this volume. This is mass distribution of Bitcoin. I would not try to go catching I won't say a falling knife. That's a little bit hyperbolic right now, but we are seeing weakness. We're trading down below the 21-day exponential moving average, which is bearish. Now, let's talk about correlations. We'll revisit what we discussed last week. That was the monthly chart of Bitcoin relative to the CPI, the Consumer Price Index, which is a measure of inflation. And you can see clearly that as goes the CPI, so goes Bitcoin. So we've already thrown out the window the argument that Bitcoin is not correlated with anything. Of course, it's correlated with something. Now, this is a positive correlation. And you can see here that the CPI and Bitcoin trade roughly 74% of the time, which is a pretty tight correlation. The problem for Bitcoin on a technical basis is that we still have RSI at 89.48. So while not a bubble, it's technically overbought on a monthly time frame and susceptible to technical selling. Now you can see that so far this month, we have not put in a new monthly higher high. Why might that be? Let's take a look at the price of Bitcoin relative to the 10-year yield. Now, overlaid in gray is the 10-year yield. Same deal here with the overlay of price performance relative to Bitcoin. And you can see that as yields peaked out in October of 2018, you began to see bottoming action on Bitcoin. And then we went on a tear as yields began to roll over. And now that we're seeing yields rise up higher, you're seeing stalling action, profit taking, and topping action on Bitcoin. Now, if you believe, as I do, that in the short term anyway, we're going to continue to see strength in yields with a price target of 1.72 on the 10-year yield, then you're probably going to see pressure on Bitcoin. And you can see the correlation between Bitcoin, while it's not an exact inverse correlation, they trade in tandem roughly spot 3% of the time. I mean, there's no real correlation. It's virtually inverse. So you can bet that if yields continue up higher, you're going to see continued pressure on Bitcoin. Taking a look at this same chart, but on a weekly time frame, let's see how those correlations change. Now, you could see that on a weekly time frame, the correlation improves slightly to just less than 1% of the time. They trade in tandem. The however is that correlation bar is rolling over. And Bitcoin on a weekly time frame has a double top, and it has broken down to a new lower low. So again, folks, this is the market sending you a signal that all is not well technically with Bitcoin. Something is bothering longs here in Bitcoin, and you could see those longs are institutional buyers. How do we know? Simple. All you need to do is take a look at your volume bar. Today, we are down on the session with massive down volume, the most volume that we've seen in just shy of a year. So we have a warning flag on the track for Bitcoin. Now, our price target remains unchanged. Weekly chart, I believe that we're going to see a retracement to the 32,500 mark on Bitcoin, which also marks the 50% retracement level on the Fibonacci tool. For a real overshoot to the downside, perhaps 27.5, but I think that is a support level at which I would think about buying Bitcoin. And if we do so, we'll most certainly send out alerts to our members, and we will discuss that trade in advance of executing it on our nightly market wraps, as well as our week ahead commentary. For those members that are watching, the week ahead commentary has been posted in the members area. Go check it out. And with that, folks, I want to say thank you for joining in. Don't forget, sign up for your Bitcoin account and earn up to $34 in crypto. So get started. Click that link below and start earning. And in closing, folks, please click that like button, subscribe to the channel, and join us tomorrow night for Sunday Night Futures Live. We'll do a follow-up to Bitcoin tomorrow night. Join us there. We'll also take a look at the opening price action on the stock market futures, gold, the dollar, everything. We'll also take stock chart requests. There's a link down below. You can enter your name and email address. We hate spam too. You get alerted 15 minutes to a half hour prior to us going live. I also have a free course, 5-part video tutorial on my 5 most powerful candlesticks. But to avoid spam, please only enter your email address once. One of those opt-in email lists, because you're going to get notified when we go live. I don't want you to get double emails. And with that, folks, everybody have a great remainder of your weekend. Hope to chat with you tomorrow night and have a profitable trading week. Be well.